Okay, guys, welcome to today's video. And in today's video, we'll be doing a top-down analysis from using EURJPY. Right? So let's get started. We'll be starting from the weekly time frame. So this is currently the weekly time frame, and we want to see how price reacted last week. So this was last week, and this was week before last price action. And if you check, this was actually how I traded last week. If you check this price action here, there was a sweep of liquidity. It was just a very small sweep. Price swept this high. Yeah. So let me cut this off. Okay, so I'm actually trying to show you how I got into my entries for last week. So this was the week before last, and if you look closely, there was a sweep of liquidity, right, above this high. So now, immediately that happened, we had a pullback. Remember, we are still bullish, and this was just a minor sweep. So from the daily time frame, also from this weekly, you notice that price is reacting from the body of this candle, right? So which means we are still bullish. Um, so there was a reaction from the body of this candle, and then on the daily time frame, this was where price swept that week's high. This place, that zone here, this zone. Look at the sweep here. That was where it happened. So after that sweep, you notice market moved down and tap on this body, the body of this week of the weekly candle. So this is the body of the weekly candle here, like we highlighted here. And also you notice that this did not break structure. Immediately the market tapped on this other block, this candle here from the weekly time frame, which is there's an FVG here. There's an FVG from here. So that's FVG on the daily time frame. So you can see it aligned with the body of that candlestick, right? Now immediately price tapped there, price did not break below. It started reacting, started moving up. This on Wednesday, this was on Thursday, and this was on Friday. So this was where the week ended before we got into this week, which was just the week that just ended now. So this shows you that price is still going for this high. Price is still coming for this high here, this high, right? Price is still coming to take out this liquidity here, the buy side liquidity, because this there was no break of structure here. So automatically this becomes a weak high. This zone here becomes a weak high, right? Now once that has happened, what do you want to see next? You want to project your trade into this zone here. So that was exactly what I traded last week. Um, so last week I traded from here down to taking out this high. That was my main target. So now let's look into what should we be expecting next week. Um, Let me start from the weekly time frame as well. So let me take this off. And this. So what should we be expecting for next week price action on Euro JPY? So we've seen clearly that price has taken out this high. So price has taken out that high on the weekly time frame. um, and if you watch closely, we've been protecting this low, the weekly lows, right? So protected, this low is protected low, this low is a protected low, this low is a protected low, this low and a protected low, because price has been protecting this low basically, right? So now on the daily time frame, this was this was where price broke structure, right? So this was the break of structure here. Let me take this off. So this was the break of structure, the break of structure here, right? And the break of structure here. So I'll call that break of structure. So we had the break of structure there. Now let's go to the lower time frame. Let's go to the 4 hour time frame. Let's go to the 4 hour time frame. And you also notice this place here, there's a liquidity sweep here. So take note of that. There's a liquidity sweep here. Previous day's low has been taken out already. So that is Thursday's low has been taken out by Friday's candlestick. So let's go to the 4 hour time frame and see. Okay. Now on the 4 hour time frame, you discover that previous day's low. This is the previous day's low. So let me just add this previous day's low. Sorry. I don't know why my this thing is not. Sorry. So I'll just this. I wanted to call this previous. I don't know why. Um, my this thing is not coming up. Okay. So let me just. I didn't actually add this. Let me make this previous. Probably this is an issue with my network. It's an issue with my network. So we'll just manage it. So as you can see, this low has been taken out. Previous this low. So that low has been taken out, which is the previous day's low. And what are we expecting? We are expecting if once the previous day's low is taken out, the market should continue bullish, right? We should go bullish. And if you watch closely, that previous day's low aligned with the body of this candlestick. This hammer is the hammer. See how it aligned with the body of the candlestick. So that's where price is currently reacting from, and immediately we got there, you can see how price pushed to the upside. Price pushed to the upside. But then watch closely what price did, because when I'm actually marking out my structure and knowing my market direction, I pay close attention to every detail. So if you watch closely here, price is reacting from this week. Watch closely. Now immediately price mitigated this, but the body of this candlestick, I was expecting price to continue the buy and take out this high, right? But price failed to go take out that high. Instead, the market came after mitigating here, it moved to this breaker block here, and then it started reacting. So instead of taking out this high, is now is now selling. And also what this tells us, that it tells us that market is coming to take out this low. this automatically becomes a week low, right? This automatically becomes a week low. Okay, let me see if I can. Okay, previous days low. So this automatically becomes a week low. Now, and if you watch from the 1 hour time frame, if you watch from the 1 hour time frame, price is already mitigating to take out. There's mitigation to take out this low already. Look at this here. We had, if you go even lower to the 30 minutes time frame or even the 15 minutes, you see it clearly. So from 30 minutes, see, look at this mitigation here. Price mitigated the body of this candlestick. I was not on my charts. I would have taken this sell, right? Price mitigated that, and price mitigated this candlestick as well. The body of this candlestick. Look at how price is mitigating the body candlesticks. So we mitigated that candlestick as well. And then we also mitigated this candlestick. This would have been my sell POI, this zone here, but it's not my chart. And I would have sold into taking out this low. Yes, I would have sold into taking out this low. I would have sold into taking out this low. Because price is certainly coming for that low, right? Anything can happen. But from the analysis, you can see that price is coming for that low. So by next week, if I am to buy, if I have to buy, I would want to see a supply fail, right? Because from all indication, we are going bullish, we are selling. So I wouldn't want to be, I wouldn't want to take a buy now until this week low is taken out. So once this low is taken out, and remember we are still within the body of the weekly candlestick. So if price price might sorry so um price might actually do something like this from here down to this place, and then start giving bullish motivation, then I can take my buy, right? But if I don't see something like this, I'm still going to be bearish on Euro JPY. So until this low is taken out, this is a weak low. Until this weak low is taken out, then I'll wait for a change in market structure. I'll wait for a bullish sign before I'll start buying. But if I don't see any of these, then I'll keep selling, because last week what price did, price basically formed liquidity. If you look closely, this is a trend line liquidity here. Markets formed a trend line liquidity. Basically, this is not as it looks, but if you watch, we've been mitigating everything on this line here has been mitigated. Price mitigated here. We had another mitigation here. We had another mitigation here. We had another mitigation here. So all these, everything here becomes liquidity for price to take out. So I don't think I would be buying, because from all indication we are selling. We are selling. So let's just wait and see. From what I just showed you now, this is no longer a break of structure. This is now a sweep of liquidity or stop hunt, right? You can call this a sweep of liquidity, or call it a stop on. It's no longer a broken structure. So let's just wait for markets to open, and then we would see what the market gives us. If you enjoyed this video, don't forget to hit the subscribe button and turn on your notification bell so that whenever I make more videos like this, you'll be the first to get notified. Thank you.